Good afternoon. Welcome to Midcap Radar. I'm Reema Tendulkar. With me, Sonal Bhutra, and these are the top stories. Midcaps underperform large pairs on monthly options expiry day in a holiday-shortened week.
Indus Towers hurts on a key client default, reports its first ever quarterly loss as it sets aside nearly 2,300 crore rupees to provide for a telco's dues.
Car trade in Sona BLW Precision Forgings gain on a healthy third quarter. Sona BLW Precision's management tells CNBC-TV18 it is targeting 25 to 30% revenue growth for FY24.
Tatwachintan Pharma slides as an 800 basis point cut in margin weighs on third quarter earnings, and the stock is declining by 4%.
Pidilite slips after a weak showing in third quarter. The management tells CNBC-TV18 they've been unsuccessful in passing through cost to customers, but target high single to double-digit volume growth in Q4.
Okay, those are the top headlines in the markets. They continue to reel under pressure. It's a big fall that we are seeing across the board. Nifty is down 196 points. We also have the Bank Nifty, which is the biggest loser. So that index is down 2% or 900 points. There has been an attempt of recovery, but still the mood of the market remains on the bearish side. Yes, there is a recovery which is being attempted. The moves on the market, especially in the last 1 hour of trade, will be important to watch out for because it is the monthly F&O expiry as well. So a lot to track, a lot of earnings which are trickling in as well. Bajaj Auto numbers will be out in some time, so Auto Index continues to remain in focus after strong numbers that Maruti reported yesterday, and Tata Motors too is expected to report numbers now. Moving on the first management on the show, we have Sharda Cropchem, which delivered a weak third quarter. This was led in part by its high exposure to European markets. The company's margin took a hit even as its revenue grew 15% on a YOY basis. We have Mr. R.V. Bubna, who is the chairman and managing director of the company, joining us now to discuss what the outlook is and if things are looking better because the stock is up 6.5% in trade today. Mr. Bubna, good afternoon. Thank you so much for joining us, sir, here on CNBC TV18. Well, you did indicate earlier quarter 3 will be better than quarter 2. Can you tell us what is quarter 4 looking like? Of course, we've just been a month or something in this particular quarter. How is demand, especially from the European region? And are you seeing any impact of currency still on your books?
Yes, madam. We are seeing a positive impact of the currency change in this quarter. The euro has recovered from 0.96 euros to a dollar to almost 1.09. And these are all going to have a very positive impact on the working of the company.
So with the improvement or the recovery and strength that we're seeing in the euro dollar, how much do you think you will be able to improve your margins? Because I believe that was one of the factors which hurt your margins. So operating margins in Q3 were 19.3%. What could we see in Q4? What's the sensitivity like?
18 to 20%, madam.
So not significant improvement, right? So you're right, closer to the upper end already.
Madam, we are carrying the losses of the first half of this year.
Okay.
Because of the currency, we have to also make up for that.
And when will that run out? When do you think you will start enjoying the benefits of the current currency moves?
From 1st of April.
Okay, 1st of April. So you've also mentioned in your presentation that you are taking some measures to, make do from the impact of forex that you're seeing. Earlier, sourcing from euro was literally nil. Have you been able to increase it? And your focus on NAFTA region, how much has it increased by? We did see some impact this quarter as well. But say 2 to 3 quarters down the line, what will the geographical mix look like?
Madam, Europe is going to be the number one geographical region for us because this is the region which is giving us the best margins. And then number 2 will be NAFTA, number 3 will be rest of the world, and number 4 will be Latin America.
Okay, and Latin America did see some decline this time around, sir. What led to that?
Mainly the economies of important Latin American countries. We are finding big turmoil. The currencies are getting devaluated or weakening against US dollars. And they are not able to sustain their budget.
By the way, here is an important clarification coming in from the Adani Group, where the company says that the Hindenburg Research has published a report without making any attempt to contact us or verify the facts. The report is a malicious combination of selective misinformation and stale, baseless and discredited allegations that have been tested and rejected by India's highest court. The timing of the report's publication, remember, it comes just as the QIB or the anchor allotment book will be closing today and the retail book will be opening in just a few days for that big 20,000 FPO, 20,000 crore FPO. So the company in its report says, or clarification, says the timing of the report's publication clearly betrays a brazen, malign intention to undermine the group's reputation with the principal objective of damaging the upcoming follow-on public offering from Adani Enterprises, which is the biggest FPO ever in India. The investor community has always reposed faith in the Adani Group on the basis of detailed analysis and reports prepared by financial experts and leading national and international credit rating agencies. Our informed and knowledgeable investors are not influenced by one-sided, motivated, unsubstantiated reports with vested interest. Yeah. So that's the statement which is coming.
And there has been a substantial recovery in some of these Adani Group names as well, right? So Adani Ports, that has recovered from the lows. We have seen that Ambuja Cements too has recovered from the lows. We have Adani Enterprises. So this clarification has been important, and that's why we are seeing the sharp recovery from the lows, at least for some of these group names as well. Of course, we'll keep getting you more updates on this one. Mr. Bubna, thank you for patiently waiting by. We just had to address an important piece of information. The Adani Group stocks are recovering from the lows. You did say that the Latin American region did see a decline this time around because of the economies and the different issues that the region was facing. I wanted to speak to you about your non-agrochemical business as well now, because it is a small part, but it did see some recovery. What is the focus here? What kind of growth rates are you looking at? Because it was up 12% on a YOY basis this time.
Madam, we will continue to have this pace of growth, at least for the next 1 or 2 years.
Okay. Is there a risk to the 9% volume growth that we've seen in Q3, or do you think it will continue?
Yes, madam.
So 9 to 10% is the volume growth that we should expect going ahead as well?
Yes.
Okay, all right, 9 to 10% volume growth. And working capital days, they are at 86 versus 72 days that we saw last time. What is the sustainable number here? Are you seeing higher inventory days? Is there an impact as far as cash flows are concerned, or receiving money from your clients are concerned?
Madam, working capital days are going to go down from this level. This has been a combination of some situations that it has gone up, but it's very much under control, and it'll come back to this, or more or less the same figures as we've been having the last few years.
So what will be the price realization that we should expect in the near term?
The price realization should improve with the improvement of euro over the dollar.
Okay. All right. Okay, Mr. Bubna, thank you so much, sir, for joining us and giving us all those details. The street definitely likes your commentary because the stock is up 6.5% in a very weak market. So, yes, Q3 did see an improvement. Q4, according to Sharda Cropchem, should see further improvement now. Time for a break, but before that, it is also time for CNBC TV18 Budget Quiz. Remember, there are prizes to be won every day. We gave you the question at 9:14 today, but in case you missed it, here is today's question. When did Nirmala Sitharaman present her first budget? And your options are A, February 1, 2018, B, February 1, 2019, C, July 5, 2019, and D, February 1, 2020. Send us your answers on Twitter. Post your answer as a comment on the question tweet on CNBC TV18 News. Use the hashtag budget with CNBC TV18. Now hurry and send us your answers. Remember, we will announce the winner at 3 p.m. today.
Welcome back. The next corporate on our radar is Kaveri Seeds. It's reported a strong Q3. The other income has boosted the company's profitability. Revenues up 14.5%. Margins too have expanded on a year-on-year basis from 6%. EBITDA margins now stand at 9.5%. And there is a big jump in the company's profitability, 38 crores versus 7 crores, aided by the higher other income. Mithun Chand, the executive director at Kaveri Seeds, is now with us on the show now. Afternoon, and thanks so much for joining in. You operate in various categories. Maize is one of your big ones. You also have exposure to hybrid rice, selection rice, vegetables. Could you give us the volume growth in each of these segments and the outlook as well going ahead? Where is it that you are seeing big growth? Where is it that growth could be a bit subdued?
Good afternoon. This quarter we had a very good quarter when compared to the previous quarter. We have grown in all segments, not only in maize, we have grown in wheat, hybrid rice, vegetables, and even in other small segments. So all across the board, we have gained growth in all these segments. And as an industry, also we are seeing a good positivity coming up, and our new hybrids are really doing well. If you see the contribution of the new hybrids when compared to the previous year, are up by up to 34% from 19%. So these are very much accepted by the farmers, and going forward, fourth quarter is anyway a lean quarter for us. But even for the next year, we see a good positivity in terms of accepting our seeds, and we have very good strong pipeline hybrids for the coming future. So we see a growth of around like 12 to 15% as the top line growth, and close to 20% as EBITDA growth. Even in this quarter, we have witnessed like the EBITDA margins are slightly improved compared to the previous 9 months, and I think this will be sustainable, more than sustainable. Even we have a fair chance of increasing the EBITDA margin going out to the 28 to 30% levels.
Okay, so margins by the end of this year, you're saying will be around 28 to 30%.
Fourth quarter is a lean quarter for
Yes.
us. I mean, the margins will remain or slightly up or down by 0.5%, because fourth quarter is a very lean quarter.
So most of your earnings are actually in the June quarter anyway. So that is something that will aid margins. All right. So can you tell us, since you've seen growth in categories, hybrid rice is up 117%, maize is up 46.5%, selection rice though on a YOY basis is down 24%, vegetables is down 8%. What was the volume growth? Was this growth led by volumes or realizations? And the decline that you've seen in selection rice, what was it led by?
So basically, it's a combination of both volume and revenue growth. Revenue growth is slightly higher than the volume growth in some of the crops. As we deal with many hybrid seeds, realizations of each seeds differ. But if we need to compare as overall as such, in selection rice, some returns were there in the third quarter. That's the reason we have not seen much of a growth here. But overall, if you see a selection rice, we have grown as close to a 15 to 20% on year-on-year basis.
Sir, in your presentation, you've said exports continue to be very strong. You're presently exporting to Pakistan, Sri Lanka, Bangladesh and Vietnam. What percentage of your revenues come from exports? What is the growth that you are seeing there? And do you have any target in mind?
As of now, it only contributes to 2% of the total revenue. Okay. But we are very confident that going forward, it will contribute to nothing less than 10% in the next 5 to 7 years. As we are targeting not only the neighboring countries, we are even targeting the Southeast Asian countries and the African countries. We have started registering our hybrids in these countries. But seed is a different segment where it takes some time for the acceptance. Once the farmers have accepted the seed, we see a very good growth and opportunity in export business. So that's the area where we are concentrating more on.
Okay. I wanted to understand, is maize your high margin business? Because you have seen growth of around 46.5% on a YY basis here. What was the volume growth here? What was the realization like? And will this continue to be the higher pie for your business overall?
If you see the margins in oral crops where we operate, all the margins are good. Except for the cotton, where we have seen some sort of a pressure in terms of realizing in cotton. But whereas in all other crops, we have enjoyed good margins, even if you're not only in maize, even in rice, even in selection rice, vegetables, we have a good margins. So margins as a overall, as a non-cotton segment, we have close to 30% plus or minus in each segment where we operate. And going forward also, these are much sustainable, and we think we are pretty confident the margins can even be more going forward. As the scale goes up, definitely the volume, the margins also will improve.
Okay, we'll leave it at that. So it's a short conversation today, but we've got so many mid-cap earnings to track today, and the markets too are under pressure. Thank you very much for joining in. That's the word coming in from Kaveri Seeds. We'll slip into a very short break. On the other side, we'll get you more on the market.
Welcome back. On to a special now. Like we've been telling you, CNBC-TV18 has compiled a list of the top 20 stocks to watch for this year. It's a carefully curated list of companies that warrant a closer look in 2023. Rima is now standing by at the big wall with a mid-cap player from that list. Tell us about it, Rima.
Thanks so much for that. So the stock on my list is LTIM. That's L&T Infotech and Mindtree. Now, 2022 saw the merger of two mid-cap IT companies, LTI and Mindtree. Both these two companies were growing faster than the industry. 2023 will be the first full year of combined operations as a merged entity. And the question is, can LTIMindtree continue to see industry-leading growth? Well, first, let me quickly brief you about this new big company. LTIMindtree is going to be India's 6th largest IT company with an annualized revenue of more than $4 billion. By 6th largest, I mean it trails TCS, Infosys, HCL Tech, Wipro and Tech Mahindra. But despite LTIMindtree being 40% smaller than Tech Mahindra compared to Tech Mahindra, which is much bigger in size, LTIMindtree has a far more diversified portfolio and it has a presence across all geographies and verticals, unlike Tech Mahindra, whose portfolio is more tilted towards communications or telecom. Secondly, LTIMindtree is now going to be bigger in size. Will scale help? It could help when it comes to vendor consolidation deals which are in the market, and it perhaps can now compete with the larger tier 1 IT companies for the large deals. LTIMindtree has also outlined synergies that will kick in with the help of the merger over the next 4 to 5 years. Revenue synergies of $1 billion and margin improvement of 200 basis points, which will come by way of efficiency, etc. So that is the guidance that the company has laid out. They've also indicated that they have cash in the books, and the question is, will they be using this cash in the books for opportunistic acquisitions? But what about the risks then? Well, the first quarter of operations, which was just released some time back, was a bit shaky. The company missed the mark on revenues and margins impacted by higher furloughs and integration costs. There are bound to be senior level exits as well. And finally, the valuation is not cheap. It trades at about 23-24 times forward multiple. So the question is, will the merger change the orbit of LTIMindtree? 2023 will reveal. But so far, this is what brokerages have to say. Post the Q3 numbers, many of the brokerages lowered their EPS estimates given the margin miss. CLSA is betting on LTIMindtree with an outperform rating, while Jefferies, JP Morgan, Nomura are a bit circumspect. Back to you.
Okay, thank you so much for that, Reema. As a standard disclaimer, this is not a stock recommendation. The CNBC-TV18 editorial team does not advise in trading or doing anything in the stock market by trading. Any investor or viewer is advised to carry out necessary diligence on their own or through a certified registered financial advisor or for investment decisions.